Hi there, welcome to Grain TV. It's Thursday, May 26th, and a mixed day in the grain market. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, wheat was the leader to the upside, gaining 15 cents off of its lows around 460 previously and now trading around 480. Beans took a stab at $11 but backed off by the end of the day, losing 6 cents and closing around 10.80. And corn continuing to hold ground and gaining some ground up here around 408.75. Up 4 cents on the day. Let's start with some of the news out. First of all, USDA's flash export sales gave us some good news in corn. We had a couple of deals announced. In total, it was 188,000 metric tons of old crop corn and 65,000 of new crop corn, so that was supportive. For South Africa, their government agency said their corn crop's going to come in at 7.1 million metric tons. That's off quite a bit from last year's nearly 10 million metric ton crop, but that 7.1 million metric ton crop is better than what was expected by most analysts, who look for about a 6.9 million metric ton crop. But really the news continues to be the charge higher in soymeal, and we're still sort of waiting on news out of Argentina to see what their crop's going to be. But right now the soymeal market has really been shooting higher. We'll talk about that later, but right now let's talk about the weekly export sales, because again we have some really important numbers to be focusing on here, especially in soybeans when we're talking about new crop sales. So let's take a look at what USDA pegged for this last week's of sales. And in the case of corn, we had a really good showing on old crop corn, 1.3 million metric tons, right at the top end of expectations that range from 1 to 1.3 million. New crop was a little light, coming in at the low side, 246. Beans was good for old crop, coming in at the high end of expectations, but disappointing. Another week of 150,000 metric tons, 2 weeks in a row for new crop, and that is somewhat problematic for the new crop situation, because we have such a large expectation factored in by USDA for a big export number next year. It's not to say it's a deal breaker, because we're still way early in the season on new crop, but it's troubling when we have 2 weeks in a row where we're not seeing much pickup in business. In wheat, a little bit of cancellation business as we reach the end of the marketing year, only really just a few days left in the marketing year. And then new crop was in line, or actually a little bit on the low end at 354. Let's take a look at the scorecard and see how we're faring in regards to export commitments year to date versus last year, and how that stacks up with what USDA is projecting. So when we look at corn, for the most of the marketing year, corn has been a laggard in terms of trailing USDA's export projection. But with the bump in sales here at the last part of the season, this has really helped us catch up ground. We are now only 2.8% off of last year's pace. Keep in mind, USDA has factored in a 7.5% drop in exports year on year. So that is good news. These big sales we've been doing here lately are catching us up to speed. You know, not only are they big, but they're contra-seasonal to what we normally expect, so that's helping us gain ground. Soybeans right in line, really a little bit above USDA's 5.6% drop. Right now we are year to date 5.2% off of last year. But wheat, really just a dog here, 11% off of last year, with only just another week and a half left on the export scorecard, and USDA is looking for an 8.7% drop in exports. So probably going to see that shortfall in exports be a bigger carryout into next year's crop year. Let's take a look at new crop, and here, you know, we're only talking about in the case of corn and beans, you know, probably half a year's worth of sales. So we still have a lot of catching up to do, or a lot of marketing year left. But let's take a look at where we stand so far on new crop commitments, 16-17 crop year. And in the case of corn, we're doing really well. You know, new crop sales have been good. They're 55% higher versus the same new crop period this time last year. USDA is looking for a 10% bump in exports. So, you know, obviously a lot of marketing year left, but we are on the right side of the equation in terms of being well above last year. Soybeans, a much different animal, 21% off of last year's. Keep in mind the USDA is factoring in a record large export pace for us in the coming marketing year, and so far we're 21% off of last year's pace, which was not a record. So that's troubling. Again, it's not a deal breaker, it's not a game changer necessarily, but we're going to need to see new crop sales start to hit the U.S. shores, and right now we're not seeing it. Wheat, right on par with expectations. Let's switch gears and talk about soymeal. This has been the driver of the bus in the case of soybeans for the last few months, and really the story there is Argentina's crop loss, not only the problems they're having in terms of lower production, but also the potential loss in quality. That loss in quality will likely translate into a much lower yield on crushing, and they are the number 2 exporter of soymeal in the world. So the soymeal market is really starting to go crazy. It has rallied about $140 a metric ton off of the lows at $260 back in April. And here we were trading around $410 on the close. Now beans have followed somewhat suit with the soymeal market. You can see the same April 12th low, although we got a little bit of a head start because of the concern in South America and Argentina. But you can see the last couple of weeks we've really sort of stalled out here, and that $11 mark I think is pivotal. Today in soybeans we got close to it, trading around 10.98 for a brief moment in the pre-open session, but we failed to take that out. So I'm going to be watching that $11 mark, and I'll tell you why I think it's important. Because when we look at a weekly chart on soybeans, and you will see this going all the way back to 2012, so a fairly long time period here, what you'll notice first of all is we spent the last few years really trapped between $11 and $9, and really have not traded anywhere beyond that range. Now, in the years prior to that, we spent a lot of time in the $12 to $14 range. We have not spent much time in the $11 range. To me, that's a chartist viewpoint that there's not much resistance in that area from $11 to $12. So one prevailing view might be that if we can break $11, then it may not be much of a leap to get us to $12 based on the chart patterns we have here. And I'm of the mindset that I think $11 is well within the reach of front month July beans. So stay tuned and watch accordingly. That's all we got today on Grain TV. As always, visit us online at grainhedge.com to learn how you can benefit from our trading services and our marketing services at grainhedge.com. Make sure and sign up for a free demo of our trading platform and our morning commentary. As a Grain Edge trading client, you'll get our Technical Alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.